Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist of WealthPress, or at least I was last time I checked. Today is Wednesday. It's November 24th. It's the last real trading day of this week. Tomorrow's Thanksgiving holiday. Friday, I believe the market is open a half day. I don't even know what the hell that's all about. Basically, it's a holiday. This is it. So as you can see here, the market is finally doing what I said it was going to do. I'm sometimes a little bit early to the party, but usually I'm right. NASDAQ 100 down 63. The Dow's down about 134. Not really crazy. I mean, this is beyond random. Definitely beyond random. But I wouldn't read too much into it because today is going to be a crazy day. We've got durable goods. We've got GDP. We've got international trades. I mean, we've got everything today. I think that every other federal report is coming out today. The big one is going to be GDP, durable goods, and international trades and goods and services. New home sales, that's going to be okay. Personal income, that's going to be okay. Jobless claims, that's going to be okay. I can't believe we're going to have jobless claims and personal income at the same time. That's really something. But keep your eye on the bond market today. And as you can see here, the bond market's higher. Now, I wanted to sell the bond market. We sold the bond market around here. We took profit around here. And I wanted to wait for it to come back up and sell it down to here, but it never came back up. And now, around this day here, pay attention to what I'm about to say. Powell got reelected, and Powell has been the most bullish interest rate higher guy. Let me rephrase that. He's been the most hawkish, not the most dovish on higher rates. So with him getting reelected, the bond market took off. But now with the market down, the stock market down, as I showed you right here, the bond market is higher because when stocks go down, especially tech stocks, bonds go down. I want you guys to pay close attention to today's data because if the data is better than expected, if the Fed data is a lot better than expected, there's a chance, I don't know if it's going to happen or not, but there's a chance that the bond market's going to go higher. I'm looking to sell it around the 150 area, maybe 150, 149-ish, but I'm looking to sell it around here. I think we're still going to remain choppy for quite some time. I don't think we're going to break lower. I think we're going to go higher because the stock market's a little bit overdone to the upside. Another reason why I think bonds are going to go up is because stocks are ready to go down. Look at the put-to-call ratio. I mentioned this to you. We went down to a 58. We're still only at 80, 84 right now. The bottom line is, this is when the market bottomed out, and this is when the market tops out, and the market looks like it topped out, especially chip stocks, semiconductors. I warned you about this. I was a little early. I said it like right here, but look at this. This is too much, too fast. The divergence looks like we're going back into the downturn. And as you could see here, it looks exactly the same on the NASDAQ 100. So this is going to impact, yeah, there it is right there. And here you could see the divergence. Look. Up, down. That's major divergence, and that's telling us that we need to cool off and cool off quickly. Now, the good thing is the Dow Jones has already been coming down quite a bit. It's already been going down for about 2 weeks. So I don't think we're going to see as much selling pressure in the Dow Jones or in the blue chips as we are in the chip stocks and software stocks. I think we're going to see a lot of money moving from the speculative stocks into higher dividend stocks because interest rates are going to go higher, which means bonds are going to go lower. And as you can see here, the trend has been kind of going choppiness, but with a down inclination, and the 200-day moving average is down, which means there's a good chance we're going to go further down, 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 not high. The big report is going to be the GDP. I'll just give you a couple of markers to look for. I mentioned this yesterday. If we're weak, if we're like at 1.5, then Fed has a really good case for not doing anything to interest rates, to letting things go. And if that's the case, then bonds will skyrocket and stocks will cool off. That's if the economy is soft. If, on the other hand, it comes in at 2.2 or 2.4, then Powell has some explaining to do. And it means it's time to raise rates, and that's going to put more pressure on the bond market. It means bonds will probably drop, which I don't think will happen, but we will see. So I personally think the numbers are going to be kind of lackluster on mark, but not too high, and we're going to remain where we're at with bonds. I don't think the Fed's going to take any action, especially with the put-to-call ratio telling us we're topping out. especially with the, where are we here? I got so many charts open, I can't make heads or tails, especially with the S&P 500 being near all-time highs and cooling off like that. And they're still holding on pretty good. I think we need to pull back on the S&P. The interesting thing about the S&P is you've got the defensive, speculative, and the blue chip stocks. So the S&P right now is a really good indicator to look at because it's kind of giving us both sides of it. And as you can see here, it's kind of turning a little lower, but it has been diverging as well. Yes, it has. Look. See? I don't mess around. I say it the way it is. So the S&P needs to cool off too. Basically, the only index I really like right now is the Dow and the Russell 2000, and those are a little hanky-panky too. Let's talk about global economy a little bit. And again, as I mentioned, you want to pay attention to the GDP, durable goods, international trades, and those are coming out in about an hour and 5 minutes, all of these reports. And you'll have time to make adjustments before the market opens and so forth. Right now, the market is down 0.27, nothing crazy. The Dow Jones is down, let's see how much the Dow is down, 124 points. So it looks like we may come down to the 50-day moving average on the Dow. Now, let's talk a little bit about global economy. Global shares were mixed Wednesdays. Worries about inflation set off expectations that the U.S. Federal Reserve might move faster because Powell got reelected. And again, now he has nothing to fear. He can now do whatever he wants. This is his last term. He doesn't have to worry about favors, policy. He could now do whatever he wants, and I think he's going to become more aggressive. Wall Street will get a few pieces of economic data. We talked about that at length just now. That would give investors a better sense of economic recovery, pace and breadth, 100%. Labor Department will release its unemployment benefits. Those have been really good. That's not going to impact anything unless they're just crazy off. Commerce Department, third quarter GDP, and new home sales. New home sales are going to be awesome. Federal release minutes later in the day of the October policy meeting, potentially giving investors more details about the central bank's plan to start trimming bond purchases. That's why I say keep your eye on the bond market today. Oil. You know, this is amazing. Price of U.S. crude oil rose after President Biden decided to put 50 million barrels of oil into the nation's plant. Folks, I'm going to tell you something right now. Do you know what 50 million barrels of oil is? That's like one day's supply. Hello? Is anybody in there? What are you doing, Biden? The move and you know what oil did? It rose. It didn't even go down yesterday. It rose. I mean, this guy is something. The move was made in concern with big oil consuming nations, including Japan, South Korea, and India. Yeah, good luck out muscling OPEC. They're a bigger gang than you, Biden. The release of the oil reserve may not necessarily bring down oil prices. No, I don't think so. But analysts say it may serve as a message to OPEC. Oh, yeah, message to OPEC. Yeah, did they really care what Biden thinks? Honestly, did they really think what Biden thinks? Biden has been urging big oil producers to move more quickly. Yeah, they're going to listen to Biden. Yeah, oh yeah, of course. All right, let's move on. So remember, today's Wednesday. I explained to you that the market is more vulnerable. It's a much better right now to be in stocks that are dividend, blue chip, think Dow 30, think conservative, think Coca-Cola, think General Mills, those type of stocks. And also, COVID spike is starting to spike, so we may have to cool off on a couple of the hotel stocks, which we own, by the way, in our portfolios. And I'll talk about that later today in our VIP session. If you guys are watching this video, remind me if I forget to talk about it later today. Now, remember, today's Wednesday. Today is Red Meat Day, and it's before the holiday. I'm going to give you guys a long setup and a short setup. How about that, right? So, long setup, Ritchie Brothers Auctioneers. There's been a lot of auctioning going on. The stock is killing it. It's pulling back right now, and I really, really like it. I like where it's at right now. I'd be buying it at this level, and if it drops to the 50-day moving average, I would get out, and I would cover my long right around the 65 level. Stop loss right here, entry right here, exit right around the 75 level. That's my 5 cents on this stock. That's RBA. And if you're an options trader, probably right now you want to go to March. And let's see, it's a 70. Yeah, you could do the 75 strike price right here, or you could do the 70. One of these two. March 18th expiration, plenty of time. 70, 75 right here. That's the golden strike prices right here. And for the short side, utility, Southern Company. Look at this. It made an all-time high in September. It's been going down, and I would just fade this rally right here. It looks like very choppy. Choppy stocks have less risk. I would put a stop loss like outside of the range at 64, sell it right here, and cover it right at the 61-ish level, right around here. That would be my positioning. Again, you want to be very, very careful today. We've got a lot of data. There's not going to be a lot of liquidity because a lot of hedge funds are playing hanky-panky. You want to keep your eye on the Dow and on the NASDAQ, and there's going to be a good chance we're going to see a sell-off in the NASDAQ today. I can't help it. It is what it is. So be very, very cautious. Keep your eye on the bond market. Put the call ratio. Everything is telling us we're going to trade a little bit lower, especially on the technology, the QQQ, large cap tech, and chip stocks. Now, before I let you go, I've got something important for you. And remember, long RBA, short Southern. Now, Wall Street knows that the key to beating inflation is by trying to flood the stocks that are set to outperform. It just makes sense. But what if? What if I said there's a way to uncover these stocks before the giant surge happens? Well, thanks to this stock market trigger that's already allowed me to lock in winners like 36.92% on APTV in 7 days, 53.66% on Power in 4 days, folks, even 83.87% on Albemarle in 6 days. Every trader now can. You can too, guys. Now, want to learn how investors can identify stocks crossing my sniper line? Of course you do. We've had on my discretionary trade since October 1st over 80% success rates on all closed trades. These sniper lines have been firing, and we've had 7 or 8 winners in a row on Sniper. I want you guys to click on the link below to learn more about my Sniper Trader Pro strategy now. And make sure to like this video. Subscribe to this channel if you're watching on YouTube. Stay ahead of this market. Be the first to be notified when I post my next video. And by the way, our offices are closed on Thursday and Friday for Thanksgiving. But don't worry, I'm working on some hot new videos for you. Be on the lookout for trading ideas coming your way. Happy Thanksgiving, everyone, and have a great session. And I'll be around all weekend. I'm not going to be that busy. Send me an email. I want to hear from you. Questions, feedback, nasty comments. I don't care. Whatever it is, I want to hear from you. Support@marketgeeks.com. Send me an email if you're getting some value out of this. Send me an email if you've made some money out of the last trades, the last 35 trades that had an 80% success rate. Let me know. I want to hear from you. And have an amazing, amazing weekend. And check out this shirt. It says, I'd rather be trading, which is what I'd rather be doing instead of not doing much tomorrow and Friday. But anyways, have some good turkey, have some ham, spend some time with your family, and send me an email. Support@marketgeeks.com. Want to hear from you. Bye, guys. Have a great, great holiday, and take it easy with that pumpkin pie. Bye.